Hi guys, I hope you're good. Let's have a quick look at Ger40. Yeah, so the weekly chart is open, as you guys can see, and I'm sure that you guys remember that we last spoke about this M structure over here, which has a neckline at that point. And we had mentioned that since price had closed below the neckline of that M structure, the expectation was for price to come back to the neckline to retest it, and at this point we would look for selling opportunities to around this level over here. This is what we last spoke about in regards to Ger40, and the reason why we said that the market should more or less come to around this level is because of this candlestick over here, which is a liquidity candlestick, and it is carrying a whole lot of liquidity where it ends, right? So this is the anticipation, and this is what I would love to see happen over the next coming days and even weeks, right? So what I'm going to do now is I'm just going to add a neckline to that M structure. So just bear with me while I do so. So there goes our neckline. And just to reiterate, just remember that necklines are an area and not an actual line, right? They are an area and not an actual line, right? So we can say that this is our neckline more or less, right? Even though it seems as if price almost broke to the upper side of this level over here, right? The neckline is still very much relevant. Nonetheless, let's keep going forward. So the next thing that I'm going to do is just mark that liquidity candlestick as well at the bottom, because this level is also very much important, as there's a lot of liquidity that is stuck at this level over here, right? To add to that, we also had this W structure over here, right? And I had mentioned previously that when it comes to W structures, what normally happens is that a lot of traders and investors buy on that second leg of that W structure. So due to the fact that we have the second leg of this W structure, a lot of people bought at that zone, putting their stop losses just below that structure. So we also have a lot of stop losses, as I say, that are stuck here at this level, and the anticipation is for price to move to this level first to grab that liquidity, and also possibly the stop losses that are at that level, and then from there we might see price start to move further up, right? Also bear in mind that at this level here we have another smaller W structure, and as much as the anticipation is for price to get to this level, what may actually happen is price may bounce at this level and then push further up. This W structure will be better visible as we head to the lower time frames, but for now, in regards to the weekly chart, the most important thing to remember is that we have this M structure with a neckline over here, as well as this level over here where we have that liquidity candlestick, right? So what I'm going to do now is use the Fibonacci retracement tool just to see if this level actually aligns with any of the key numbers that we have on the Fibonacci retracement tool, right? So just bear with me while I do so. Let's see. Fibonacci, there we go. And there we go. So can you guys see that this M structure has a neckline that is in alignment with the 50.0% Fibonacci retracement level? So what this tells us, or what this confirms to us, is that indeed we should be looking for selling opportunities at this point, right? And that is because, number one, as I said, we have this M structure. Number two, we have the neckline of that M structure. And number three, we have the neckline of that M structure being in alignment with the 50% Fibonacci retracement tool, or retracement, yeah, whatever you want to call it. Yeah. So let's proceed. So from here, what I'm going to do is head down to the daily chart. Right, so here we are on the daily chart. The first thing that I'm going to do on this particular chart is just to add my channel. Let's see, add channel. Just bear with me. So there goes our daily channel, more or less. There we go. All right. So what else do we see on this chart that we should be paying attention to? Can you guys see that we had at this level rather a gap, and we can also see that this candlestick over here with a small body and a long upper wick closed that gap. And in previous videos I spoke about how gaps are liquidity areas, as there's a lot of capital actually sitting at all those areas, and the market needs to grab all of that liquidity at one point or another. And we can see at this point that that liquidity was grabbed, right? So let's proceed. So what else do we see on this chart? What else do we see on this chart that we should be paying attention to? Another thing that is also very much interesting is the fact that we have this candlestick over here, right? It is a bullish candlestick with a small body and a long upper wick. So where that candlestick ends at the top, we have a whole lot of liquidity at that level, and that tells us that the market at one point or another needs to head back up to grab that liquidity, right? So everywhere we have liquidity points, at one point or another the market needs to grab that liquidity. So I'm just going to mark it as well so that we won't forget about it, right? On the weekly chart, I had also spoken about the fact that we have this W structure over here, right? And I said that the anticipation is for price from this area, to move down to at least this level over here, right? Because this level is not only the neckline of this W structure, but it is also a very strong level of support. And that is because we had a rejection at this level and another rejection at that level, and we might get another third rejection at this particular level over here, right? However, myself personally, I would love to see price push further down to at least this level to grab the liquidity that's at that level, and then again push further down to grab the liquidity that's sitting just below here. And these are actually stop losses, because as I said, due to this W structure over here, a lot of traders and investors bought on that second leg of that W structure, putting their stop losses just below, right? So that is what I would love to see happen on this particular instrument. Nonetheless, we'll see how things actually unfold as the weeks and days go by, right? So as much as we also have, or rather as much as we have this W structure, just note that we have another W structure at this level over here, and we can say that the neckline is somewhere here at this level. We saw price breaking to the upside and then coming back to retest that neckline and then pushing further up. I usually say that when we have W structures, ideally we'd love to see price break the neckline to the top side and then come back to the neckline to retest it, and this is where we would look for the buying opportunities. However, at this level or in this area, I would not have looked for buying opportunities on the retest of that neckline, and that is because we have an opposing level at this point, which is also the neckline of that huge M structure that we spoke about on the weekly chart, and it's also a very strong level of resistance. So for me, it would have been a bit tricky or risky to sell at this point, because your take profit would be at around the same level, which is here. So the risk for me was not worth it, so I would not have taken that particular trade, right? So let's proceed. So what else do we see on this chart that is interesting that we should be paying attention to? So we also have at this level a liquidity candlestick. We have another one at this level, right? And at all these levels, we know that the market needs to at some point come down to grab all of those liquidity points, right? So what I'm going to do now is push down to the H4 chart. Okay, I'm just going to fix my equidistant lines. Just bear with me. There we go. So here we are on the H4 chart. Let's see, what do we see on this chart? So the first thing that I'm going to do on this chart is actually add my H4 channel as well. Just bear with me. Let's see. So there goes our H4. There goes our H4 channel. There we go. Right, this should be fine. Yeah, so here we are. What do we see on this chart that is interesting that we should be paying attention to? Let's see. What do we see on this chart? So on the H4 chart, we have in this region a head and shoulders pattern, with this side being the left hand shoulder, this side being the head, and this being the right hand shoulder, right? And the neckline is somewhere in this region, right? So in regards to this particular index, which is Ger40, yes, we're looking for selling opportunities. However, remember I spoke about the fact that we have this level over here, which is a liquidity level, and what may actually happen in the next coming days is that the market may push to around this level to retest the same level, as well as to grab that liquidity, and by doing so it may be creating a very nice M structure, and from this point what may happen is the market may push further down, right? This is what may happen in the next coming days, so we need to be looking out for that. Also, if you want to be safe, it may be best for you to wait for price to close below this channel over here. Let's say, for example, on Monday or Tuesday it goes up and then pushes down, closing below this triangle, or this channel rather. I think that would be a safer trade, right? And once price is closed below this, I think that's confirmation that price indeed has to push further down, right? But you just also need to ensure that you are cognizant of all these levels that are support levels over here, right? These are all strong support levels. However, as I said, the anticipation is for price to move further down. But as I said, just bear in mind that we have all these support levels. Yeah, so that is it in as far as my analysis of Ger40 goes. Just let me just go back to the daily chart. Yeah, so in conclusion, as I said, we'd love to see price head back, or rather head down from this level, because remember, number one, we have that huge M structure on the weekly chart. Number two, this level is the neckline of that huge M structure, right? Number three, the very same level aligns with the 50 0.0% Fibonacci retracement level, right? And as I said, guys, that we have this level as well, which is carrying a whole lot of liquidity. And what may actually happen in the next coming days is that the market may push again to the very same level to retest it, to form an M structure, as well as to grab the liquidity that's sitting up there, and then from there push further down, right? That is what I would love to see happen. But just keep in the back of your mind as well that the market doesn't always go as we would love it to go, right? So we just need to make sure that we keep reacting based on what price does, right? Keep reacting. Do not predict, keep reacting. So yeah, that is it in as far as my analysis goes for Ger40. Cheers.